Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
A lot to get to. We want to bring in Max Chafkin, senior reporter at Bloomberg Businessweek, co-host of the Everybody's Business and Elon Inc. podcast, so much more, a very close follower of all things. Elon, you've been listening along with us. Elon, kind of not leaving, though.
No, not leaving. And you know, I think those of us who follow this closely kind of expected this to some extent. I mean, Trump signaled it last night in his post on Truth Social. Also, you know, for all this talk of Elon getting pushed out or making his exit, we've seen those headlines. There have sure been a lot of events at the White House or at Trump-related things over the last month. They brought up the presidential travel, Musk joining Trump on this tour in the Middle East. We've also seen these kind of valedictory. This isn't even the first valedictory kind of appearance. There was a cabinet meeting, right, I believe, last month. The thing is, Trump needs Elon Musk. The Republicans need Elon Musk. He was the biggest donor to Republican candidates or Republican campaigns in the 2024 cycle. They are certainly counting on him in the 2026 cycle. And having him on side, having him a part of this, having this show of unity is helpful to the president in helping to bring Republican members of Congress around to pass the big, beautiful bill or anything else. You know, on the other hand, Musk also needs Trump, right? He, for all the reasons that made him an enthusiastic supporter of Donald Trump. I mean, SpaceX is a large government contractor. Tesla is a highly regulated company. Right. It goes on and on. Having this close relationship is very valuable. So I think it's in both their interests to keep this going. It is clear, though, that Elon Musk's kind of connection to DOGE, and I think to a greater extent, the kind of prominence of DOGE, the vision of DOGE as this kind of Elon Musk-driven, maximalist, frenetic, getting in there and breaking stuff. Right. That feels like it's sunsetting. And
to be fair, there have been numbers put out by the administration and others about, I think Elon specifically said that he still expects to hit that, I think, $1 trillion in cuts over the years or something, some large numbers. Yeah. But the point is, everybody's done a lot of reporting, including Bloomberg, that really questions some of the numbers that have been out there and what ultimately they will achieve in terms of cuts.
Yeah. Well, and even if you take what he said, right, it's $1 trillion over an undefined time period. Right. Big difference from where Elon Musk was, during the campaign, when during an event with Howard Lutnick, he said $2 trillion a year. That was then downgraded to $1 trillion. And so, by his own admission, and I think anyone who was familiar with the working of the federal government could have told him this. There were experts certainly at the time saying this is going to be very hard. That was probably an unrealistic goal. Of course, Elon Musk is all about unrealistic goals, right? That's kind of his thing. He even by his own account, likes to set these audacious goals, even if you fall short, even if you're a little late, it's still impressive.
Even if you get a black eye from your 5-year-old son.
He's going to argue that, 160 billion, which is the claimed figure, is significant. It's not a small number. It's just so far off from where they were. And when you look at, the deficit projections from this latest spending bill, right, it's not a huge number.
And Musk even pointed out that he wants to focus more on his businesses. I mean, if you're looking at Tesla's stock down close to 13% year to date, but Trump said himself that Musk will be back and forth. So how would shareholders and investors in his companies feel about this?
Elon Musk is walking a line here, and there's even sort of some kind of contradictions within the movements of the share price, because of course the stock went crazy up after Trump was elected. The story we heard back then was, the stock is going up because Elon Musk is going to have all this access, and then we reached a point where the stock went up, started trading up because Elon Musk said he was stepping away. Now, I think the truth is Tesla investors are very much on board with pretty much whatever Elon Musk says. They believe that this is a shareholder base that is different from most publicly traded companies. There is a level of belief in the CEO that is greater than a normal company. They are trusting that Elon Musk can walk a line, that he can simultaneously focus on all these companies. He's running 5 companies at the same time while maintaining his role, as we heard just now, as an advisor. I mean, there was a little bit of a shift there. You heard a question about, is he going to be involved 24/7 with his companies? It was a claim that Elon Musk made on Twitter just a few days ago. Elon Musk didn't respond to that directly, but he did say, I will continue to be an advisor and a friend. I hear that, and I think this is, this relationship, as we heard from the president and from Elon Musk, it will continue.
Really fascinating stuff, Max. Thank you so much. Really appreciate it. Max Chafkin, senior reporter at Bloomberg Businessweek, co-host of the Everybody's Business and Elon Inc. podcast. Check it out because they really do follow the day-to-day gyrations of all things Elon.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
We did hear from President Trump just from the Oval Office. He did say he expected to speak to Chinese President Xi Jinping after accusing China of violating an agreement with the United States to ease tariffs. So we did see kind of a ratcheting up of tensions between the world's 2 largest economies. That was initially putting pressure on some of the trade, but it did seem that some of that eased, as we did hear a comment out of the White House saying that he expected to actually speak to the Chinese president. But I have to say, geopolitically, so much going on. We've got the strained and evolving U.S.-China relationship, the Russia-Ukraine war, how that may end, when it will end, the Middle East, Israel and Hamas, Greenland, and more. Everyone is kind of looking at maybe what is the new global world order going forward. And 80 years later, it's hard not to wonder if the world is really kind of headed toward another Yalta Conference and a carving up of our world. Our next guest actually wrote about it for Foreign Affairs magazine. It caught our attention. It's great to have with us Monica Tooff. She's professor of international politics at the Fletcher School at Tufts University. She's taught at Oxford University's Blavatnik School of Government, Harvard University's JFK School of Government, and she spent 4 years in the U.S. Army as a Russian linguist. And she joins us from Medford, Massachusetts. Monica, great to have you here with us. How are you?
I'm terrific. Thanks for having me, Carol and Jess.
Well, it's good to have you here. There's so much coming at us domestically, but also continually geopolitically. The president just talking about various parts of the world, whether it's Russia, Ukraine, whether it's about China and trade, just from the Oval Office. Is the world about to be carved up in a new way, just like we saw after World War II?
It's a question still. I think we have to watch it. I did write this piece, and it's a speculative piece in the sense of using history, basically, of looking at prior history to try to understand what's happening. We do seem to be in a liminal moment right now where you have leaders who are talking about expansive aims. And when I talk about expansive aims, it's not only economically, but it's politically. So you have President Trump coming in and talking about Greenland. Maybe it would be nice for Greenland to be part of the United States, Canada, and then taking control over the Panama Canal. And then you have Russian President Vladimir Putin actually going in and taking Crimea and then 4 other provinces. And then, of course, we know China's President Xi would love to reacquire Taiwan. And they seem to be in a position right now politically to be able to talk about this in, this kind of language of expanding their nations geographically. And each of them seems to have sort of ideas that this is somewhat desirable. So the question is whether they succeed, right? Putin is not succeeding right now. China has not made a play for Taiwan. And President Trump, it's not clear that he has the capacity or the full desire to take Greenland, Canada. So it's a question mark still.
Well, this concept of, Professor Tooff, of spheres of influence or sphere of influence, not a new one. It's been around. They change, right? So is it, I don't know, if we think about a new carving up, is it a good thing or a bad thing or TBD?
I think it depends upon your perspective. So for the states that have managed to, and the statesmen that managed to, establish a new sphere of influence, it could be a good thing. But for the states that are sort of gobbled up within that sphere, it's not such a great thing, because basically those larger countries, what they're doing is they're using their advantages in military power, military might, economic leverage, and diplomacy, right, to secure those spheres of influence. get control of those geographic areas in order to exert more control economically and militarily without necessarily exercising formal sovereignty. And the question is over time, are they benign? So do they do good, right? Will they help develop the countries that they sort of move into? Or are they malign? Are they repressive? Generally speaking, when we were living in the world between 1945 and let's say 1991 during the Cold War period, we had the liberal West, right? And that was one bloc, and that was our sphere with Western Europe. And then you had this sort of Warsaw Pact. And within the Warsaw Pact, that was considered the Soviet Union sphere. And it didn't go so well for the East Europeans, which is why today, or in the post-1990 period, the post-Cold War period, many of those Eastern European countries try to get into the Western side, right? Into the West sphere. And the United States was the great stabilizer. What's kind of tossed this all up in the air at this point is two things. The first factor is Russian President Vladimir Putin going into Ukraine and actually using force to do that. And then secondarily, you now have a U.S. president talking in these expansive terms about possibly expanding United States territory. So it does seem to be a situation where there is change, afloat, and whether it's a good or bad thing, I think we need to suspend judgment. But I will tell you, it tends not to be a good thing. In fact, I could have, titled the piece "Fears of War," right? Because what happens is you get up into those buffer areas between where the different spheres rub up against one another, and who gets to control what part. How deep do you go into each other's sphere of influence?
How does China play into this?
It's a great question. And the thing is if you think about President Xi, he's very conservative in his movements, right? Basically, President Xi wants to keep the Chinese economy humming. Right. So he has to keep the middle class happy, keep the jobs, make sure that the real estate market doesn't collapse. And so for him, the economy is everything because it's the legitimacy on which the Communist Party and President Xi built his power. On the other hand, you have this thing looming in the background, which is nationalism. And Chinese, just like Americans, there's nationalism. And they believe that Taiwan is part of Chinese territory. And when you've got another major power, the United States, supporting Taiwan, which the Chinese see as theirs, that leads to tensions. And so the Chinese, on the one hand, under President Xi, recognize that war is very costly, right? We understand that war can be quite costly. Yet, on the other hand, there's these impulses that they need to expand economically. Oh, and by the way, politically, in terms of nationalism, it would be nice to reacquire some territories that they see as rightfully their own.
We are talking with Monica Tooff. She's professor of international politics at the Fletcher School at Tufts University. We're talking about an article that she has written for Foreign Affairs entitled "The Return of Spheres of Influence." Monica, Professor Tooff, I want to relate it to the Bloomberg audience. And I think about every story. There is, I feel like, a money component to it, right? A market component, an economic component. So if indeed we are seeing up a new carving up, and as you said, it depends on kind of how it gets carved up. But should we assume that there are implications then for financial markets, for economies? And I do think about this U.S. exceptionalism where it seems to be waning. We're talking about that a lot more today than at the beginning of the year, January 1st, when we talked about U.S. exceptionalism reigning supreme, and that applied to financial markets.
Yeah, I mean, it does matter quite a bit for the economy and for trade and for U.S. exceptionalism. And I think what's happening under the Trump administration is they're sort of tossing that exceptionalism further up in the air, right? So we do have sort of now competing powers. China has risen economically. And what's so interesting about the Chinese case is the United States helped that through the 1990s and early 2000s until all of a sudden we have the crisis in 2008, and China, and actually both China under Xi and Russian President Putin look at that 2008 crisis and think, maybe that Western capitalism isn't so great. Maybe the American dollar isn't as secure as we thought it was. And so you started seeing sort of the decoupling and trying to sort of vary out and diversify their economies a little bit more. So economics is absolutely critical to this story. But I think, it's interesting. I'm now, talking to people about political risk. It used to be geoeconomic risk.
Right.
And now people are thinking, wow, politics really matter. And I'm thinking, of course they do. I'm a political scientist by training.
Right.
But when you have leaders making major decisions about tariffs and trade, and who the rival is, right, then you're going to have changes in the economic markets.
We only have a couple of minutes left. I want to ask you, if indeed, when we see some end to the Russia-Ukraine war, if Ukraine has to give back or let go of some territory, and that is certainly seen as another win in terms of President Putin expanding his territory again after that initial annexation of Crimea, that sends a very big message, right, to the world in terms of great powers being able to take land.
Yes. What it does is it validates the use of force, right? So it basically says if you use force, then potentially you're going to be able to keep the territory that you have actually conquested and now occupy. But you know what I want to do is I'd love for the audience to think about sort of extending their time horizon. So in the shorter term or the medium term, it may be the case that Ukraine may have to modify some of its territorial construct, right? The nature and the size of the state. But over the longer term, Putin is not going to be in power the whole time. You may not have such sort of a hyper nationalist in power. And Ukraine may be able to renegotiate or get that territory back, maybe by having a referendum down the road and having some, proper electoral processes that allow the Crimeans and then those 4 provinces, the folks there. So it doesn't necessarily have to be seen as a done deal. Yes, in the moment, it would be quite painful. Again, I was talking about Chinese nationalism.
Right.
Ukrainians are nationalists, right? This is going to be very painful, right, for the country. So yes, Ukraine could be left in a rump state. But what I'd say is over the longer term, they may be able to get that territory back. It's happened before historically.
So it's interesting. I mean, political changes in governments, whether it's Russia, the United States, China. I mean, these things, as you say, kind of are going to impact things more longer term. Monica, thank you so much. Monica Tooff, professor of international politics at the Fletcher School at Tufts University, joining us from Medford, Massachusetts.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, TikTok, everybody. Just about 18 minutes coming up on the close on this Friday, wrapping up the day and the trading week overall. Just heard from Bill and Charlie. We're definitely, I said a rally, but I meant earlier, like rally off our lows, but we're still just down about 2 points on the S&P 500 and just down about 43 on the NASDAQ 100, but much more positive than we were earlier in the session.
That's right. And it looks like the S&P 500 still on course for its best May since 1990, Carol. So we'll see if that can hold through 4 p.m.
35 years. That's a long time. All right, let's get to it. Tyler Rosenlicht is with us, portfolio manager, head of natural resource equities at the publicly held investment firm Cohen & Steers. He is here in our Bloomberg Interactive Broker studio. Keep in mind, the firm has about $87 billion in assets under management. Tyler, you reminded me, it's been a while. Good to have you back. Just let's start broadly, big picture, your investment thesis and focus. Talk to us a little bit about it, especially against the backdrop of, every day we're following news out of Washington and what kind of impact that has on policy and ultimately industries and corporate earnings.
Well, thanks so much for having me. I guess there's kind of 2 pieces that I can talk about. One is the infrastructure side and one is natural resource equities. And I think both of them are really well positioned today. I'd start with infrastructure. I think there's a lot of uncertainty out there, and every day we wake up to new news that's causing a lot of concern.
Right.
What we like about infrastructure is it's really predictable. We think about it as a lower volatility, downside protected asset class. It's the stuff that you have to pay for as a consumer. It's what helps make the economy run. So we've seen a lot of interest in infrastructure, and it's very sensible to us.
You have a lot of energy companies in that fund specifically.
So within infrastructure, it's just utilities and then pipeline companies. For us, it's really the predictable.
So it is truly the infrastructure.
Just the infrastructure. Now we have natural resource equities as well, which invests across the energy value chain, metals and mining, and agribusiness. That's also seeing a lot of interesting things today, just given all the volatility that we have.
So how do you read, with everything going on with the economic data to the back and forth with the trade headlines, how do you use those types of stories to then try to figure out what the best investment thesis is?
Yeah, so let's start with infrastructure. So one of the unique things about it as an asset class is the risk that really keeps us up at night is regulatory risk and changes to regulation, changes to policy. That can be on the national level. Are we going to potentially privatize Amtrak? Could that mean for us as investors, or on the more local level? So is the utility commission going to change the rules of the game or the returns for a local utility? So our focus,
allow more nuclear or something.
Allow more nuclear, which we're really excited and bullish on.
Which we've seen the president sign some executive orders to ramp that up in the U.S.
Yeah, to us, it's really a good thing. Like, we think we're in an energy deficit globally. We think there's this tension between trying to find decarbonization efforts, but also have predictable baseload energy. Nuclear to us is a great example. It's going to require a lot of government support. And so making sure that we can understand what's going on from a policy perspective is what's going to drive investment opportunities for us.
I am curious in this fund. I'm just looking at year to date. I think it is up. I'm just looking at here. Is it up about... Why am I not seeing this number?
Probably kind of like mid-single digits, call it 7 or 8%. Yeah.
Okay. Well, I just think about, in terms of the market volatility that we've been seeing, have you been adding? Have you been subtracting? I'm just curious how, moving in and out. How much? So
I'd start with the investor appetite. We've definitely seen a lot of investor interest in infrastructure in particular. Again, uncertainty is really high and folks are looking for ways to get equity-like returns, but with a little bit less volatility. And that's what infrastructure does. Clearly, there's a lot of news out there on we need more infrastructure development. How do we finance that? And listed companies in particular are benefiting. For us, I'd say we've been somewhat defensively positioned.
Okay, that's
we think there's concerns around the macroeconomy. Things like freight rail volumes and so forth are a little bit less predictable. So we've definitely moved to, I'd call it like a 4.5 or 5 on a 0 to 10 scale in terms of risk on, risk off, which is just kind of balanced. There's some concerns out there, but we're not super concerned. And we just are trying to find the right stocks and sectors today.
What do you think are the hottest picks within infrastructure, if you're looking kind of more within groups or maybe more specific companies that are listed?
Yeah, nuclear to us is really interesting. We invest in
everybody's kind of in on nuclear.
The utilities.
Is it just because of the data? I'm thinking about all of the AI and the data and the energy needs, or was that more... It seemed to kind of supercharge it, if you will, but I'm just curious if it was kind of percolating anyway.
I think that's part of it, but it goes a little bit beyond that, which is, we think the world needs more energy, and we want energy that is, good for the environment. But we also
minus
need
the nuclear waste.
Well, for sure.
We still have to figure that one out.
But we also want it that's predictable and what we call base load. The problem with a lot of renewables is that they're intermittent. And when the sun's not shining, the wind's not blowing, they don't produce power. Guess what? If you're a data center CEO, that's a big problem. You need to make sure that the power can stay on. So nuclear to us is like the one resource that serves both masters. It is decarbonized. Yes, there is spent uranium we have to deal with, but it's also baseload. It runs at very high capacity factors at very low variable costs. And I think people are saying, hey, we know we need the energy. This is the sort of best of the worst, if you want to think about it that way. And that's why it's coming back in vogue.
What about commodity investors? Because I know you're looking at kind of the performance of real assets now versus how they would have been the last decade.
Yeah, we're really excited about the commodity cycle, and we're really excited about the natural resource equity cycle as well. I mean, we've thought about it as we've exited this period of abundance, which was kind of the 2007 to 2020 period, and we've entered what we call the era of scarcity. Generally, demand for commodities and materials is pretty strong. We've underinvested in the supply side for a really long time. Commodity producers, if you can find the right ones that aren't going to sort of miss in terms of their production profiles, they're really cheap. And we think marginal costs for what they produce are going to rise, and that's going to be good for them. So,
who benefits more, Canadian investors or U.S., if you're looking at the commodities aspect?
It really depends on the commodity you're talking about and sort of the investment. Like, for instance, take oil. We're actually pretty bearish oil, but we particularly don't like U.S. shale producers because of the depletion. Right? They see massive declines in volumes every year. We like the Canadian oil sands producers because they produce with a lot less sort of base declines. So generally speaking, the Canadian economy is a lot more commodity centric. But I think you can find good opportunities in both places.
Let's talk about a couple companies you do like in particular. And one of them is TRP, TC Energy Corporation. Tell us about this one.
Yeah, just very broadly speaking, it's an natural gas pipeline company, very predictable. Their EBITDA, when they say what it's going to be at the beginning of the year, tends to be what it is at the end of the year.
Right.
We think demand for natural gas is going to keep growing. We think data centers and everything else are going to require more investment in gas pipelines. They've got a really good footprint, and they do own some nuclear assets in Ontario that we think will sort of see some life extensions that could be good for them. But it's a very predictable way to play energy infrastructure across North America.
Canadian company, looks like it's up about almost 9% so far year to date.
Correct.
One last one, got about 30 seconds. Waste Connections, ticker is WCN. This is an American company or U.S. company.
Yeah, it's funny. A lot of people don't necessarily think about environmental services as infrastructure. We think they are. For us, it's about pricing power. It's what businesses...
You got to deal with it. It is part of the infrastructure.
You have to pay the bill, and guess what? They can raise their rates with inflation or better than inflation. So for us, we're always on the hunt for what businesses have pricing power. We've found that in a lot of waste management businesses over time, and that tends to be one that we feel really good from a volume perspective as well.
Yeah, and that name is up almost about 15% year to date.
Wow.
Yeah, I think about this stuff a lot. No, waste is like, unfortunately, it's part of our world, right?
Yeah.
You got to figure it out. Really good stuff. Thank you so much. Good to see you. Yeah. All right. Look forward to next time. Tyler Rosenlicht, he's portfolio manager, head of natural resource equities over at Cohen & Steers, joining us here in our Bloomberg Interactive Brokers studio. Folks, we're coming up on 10 minutes until we wrap up this trading day. Just up a hair on the S&P 500. And you've got a NASDAQ 100 that's down about 29. Carol Massar, Jess Benton, and this is Bloomberg Businessweek Daily.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.